But I think what's interesting also is that it's been a year where deals have fallen apart or not even been done. So I think the question is, at this point, I think everybody agrees. When we started off this event at the beginning, Mukul said, you know, last year was just kind of frightening. Everybody was fearful of everything. Well, a year later, it definitely does feel different. But how different and what's next is the big question. And I think the question is, can you do profitable deals in this environment? What kind of deals can you structure? And that's what we have this panel for. So before we do that, though, I want to turn it over to you folks. And Jeff, let's start with you because you've heard a lot today. Some different perspectives on the outlook. Jim Lockhart is still a bit worried, certainly when it comes to residential housing. Some other folks, Bob Toll kind of said, nope, you know, we're seeing the turnaround. Still some questions about the recovery. Where do you think we are? Okay, so yeah, thank you very much. We're advisors for many of our clients on risk on transactions. And I think we're seeing a tremendous amount of activity right now as our clients looking at debt deals where we're doing a fair amount of due diligence, and the due diligence is really focused just like it was an equity transaction. So clients with that are really focused on sort of loan-to-own strategies right now, and a fair amount of it. So. And that's the difference. I mean, people want to do deals, but they understand the risks now, having lived with what we've lived through over the last couple of years. So they want either some hedging or so on involved. Yeah, so I mean, some of the things that we're doing on behalf of clients, I mean, it seems to be the most savvy clients right now. It's a risk-averse environment. Many of our clients are backed by pension funds. Right. And they also have loans on various different transactions, which sort of limit the downside of risk. And what we're doing is looking at identifying and quantifying risk in different transactions, and actually using the insurance market to cap and hedge the risk to help these transactions go through. So the insurance market is definitely changing over the past year. Insurance markets are actually having a very profitable year, so they're looking at new solutions. We're developing new solutions to help our clients transact in this marketplace. So essentially identifying those risks, quantifying those, and in areas where we can use the insurance market or other markets to cap or hedge those risks, we're doing those, and then building those costs in the overall deal cost. And Grant, I want to bring you into it, but I also want to, if at any time you folks have a question, you kind of want to jump in, please just raise your hand, we'll bring you into the conversation. We'd love to do that. So Grant, what about your perspective? Yeah, thanks, Carol. I mean, I think similar to what Jeff was describing, in Asia, which is the region that we really cover, it is also a story of distressed debt. With the possible exception of China, where I think it's arguable that there's a property bubble forming. The more mature economies are certainly those in which we think that the majority of the opportunities are through the debt channel, buying real estate through effectively senior secured debt in an asset which you find attractive from an underlying perspective. I think Asia now, having been in the region for about 15 years, is incredibly similar to where it was probably 10 years ago with the currency crisis. We all know that growth is in the long run, most probable, if you look around the world, in the Asian zone. But we also realize that right now there's probably a once in a sort of 5 or 7 year buy-side opportunity. I think the critical thing in Asia is to avoid equity recapitalizations. The experience of groups that have done that and have caught the falling knife has been pretty much disastrous. So we think it's a market to be very cautious, to be patient, and to buy deep into distressed debt situation whenever possible. You mentioned bubble in China. Yeah. I mean, how bad might that bubble be? What are you guys talking about? It's difficult to understand, because I said to somebody the other day, the issue with China is just how do you rely on data for a country that is almost a continent in and of itself and with incredible diversity. But I think that the question mark for China is if the US export markets don't recover, and if Chinese consumption isn't lifted, what will that do to the world economy writ large? And I would say that's a question mark as opposed to something that we could have a firm view on either way. But I'm certainly not a China bull. Equally, I'm not a China bear. I think, again, it's one of those markets where it just pays to be really driven by numbers, to be cautious, and to keep your eyes and ears open for that one unique opportunity that makes it all worthwhile. Carlos, I want to bring you into this. I mean, earlier folks had mentioned, about a bubble previously in Brazil, but no signs of that now. You've just laid out a lot of data. I mean, give me a good snapshot of what the Brazilian real estate market is like right now.
I believe the one thing about the crisis, we were hit in two ways, in my view. First was the crisis of confidence. So nobody would buy anything, and the developers, they wouldn't do anything. They would just stop projects. And another thing was the credit. So it wasn't available to anybody, the credit, during a certain period of time. And what happened was that was kind of good for Brazil, I believe, because we were growing fast. And I believe that we couldn't handle that demand. You know, we didn't have infrastructure. We don't have that much of infrastructure or production of raw materials or everything. So if there was no crisis, maybe now we would be like with inflation high and things like that. So we weren't hit because we weren't that developed. So we didn't have that many CDOs or spread out in the market. Mm-hmm. So I believe that there's a really good room to grow now that Brazil has a really interesting fundamentals. So the inflation is controlled, the interest rates are down, a lot of investments are coming in the market. So I think that that's a really good space to be right now.